Hey everybody, Kimosabe here. Give you a little update and hopefully a little education from my perspective, the way that I look at markets. So today I wanted to talk about dips, and I have here on the chart price action. Underneath we have the relative strength index. So we do see that the relative strength index is getting into what people call overbought territory. It's in the upper regions. Everybody says, "Ooh, it's overbought and needs a pullback." Maybe it needs a pullback. And if it does need a pullback, then we have different flavors of pullback that we could have. You could have some mild, maybe something hot and spicy, or maybe it's not a dip at all and it'll be a total drop. But given the relative strength index and how it's looking, I wanted to point out how things looked previously in this cycle when the relative strength index got to those conditions. So marked them off on the chart. And what we see each time it gets to the quote unquote overbought section, it actually just means the trend is strengthening. The trend is strengthening. The trend still had more to go up from there, even in that instance. So let's zoom into this and see what it looked like. You had gotten up very far, you're still diverging, but still pushing high prices, and then you got a little drop just to clear the liquidity, popped up and back down. Some kind of ABC happened in that instance. And that was a full reset of the RSI, getting your relative strength index very low, comparable to these areas, giving you the hidden bullish divergence for a continuation push. Similar in the following instance, we had overbought conditions, and then divergences kept happening, but price kept creeping up. So for like another 3 months of up, grinding up into January before getting a drop. That led to the RSI getting back down to previous levels, even lower than these, giving you hidden bullish divergence for another continuation push. And here, when we got overbought in the overbought area, that was getting towards the end, but we didn't have a change in trend until right here on the daily. And you can see that price closed lower than that low. So that gave you a lower low close. Measure the distance between those two, and that gives you where your lower high came in. So if you are in overbought conditions or very strong conditions with the trend, there's different ways to interpret it, and different ways to bring the relative strength index down for another buy setup. Notice in this instance, this made higher highs and higher lows the whole way. There were no higher highs or lower lows and lower highs. This is all on a closing basis. It kept making higher highs and higher lows until right here. That closed lower than there, and you just continued down. Now, when trading this, I found an entry, I do believe it was on the 4-hour or 1-hour to trade it up, but my plan was this closed lower there. This is where I would look for a lower high. It came in there and shot up. So I took profits there off of my trade that I took there. And when it had a continuation push, closed higher, I just re-entered, continued pushing it up, and then found another entry here when this closed up there. And continued to push until I do believe we had a 4-hour lower low close. And then I was like, okay, there's something different going on here. And ultimately, the daily did close lower than the previous trend. So this could have been a buy the dip, but it knocked you out and let you know, hey, we're doing something different. Be careful. So in the current circumstance, we have a series of higher highs and higher lows. There's your low, there's your high, higher low, higher high, higher low, higher high, higher low. So as long as the higher highs and higher lows are in play, then your correction could indeed be very sideways and choppy and slowly grinding up. I proposed in my Elliott Wave video that I released that we would have a price target of roughly 101 to 102,000 on this coming soon, and then retrace back to the origin of this impulse up, just to take out all that liquidity and come back to wave 4 of lesser degree. Now, that is an Elliott Wave trade setup, and if price does come down to that area, I would be interested, but I would also have my stop in place, as you're supposed to with Elliott Wave theory, because the drop could be much more severe and something that most aren't looking for right now, including myself. I really can't look for it until we change the trend, so you can't really look for something that hasn't even started yet. So still have higher highs, higher lows here on the daily. Still looks good, but let's get into a lower time frame. So here on the 12-hour, this to me, it looks really, really good for the trade setup here. This leg right here matches this perfectly. I'm expecting this leg to pop up and grab the 100,000. Expecting it to probably have a daily candle close on Monday above that area. And then what follows is yet to be seen. Because once this move is complete, then you start something else. Something else will start. Now it could be something as simple as this pattern, playing from up there, just down, up, and a little choppy down, and then repeat this leg and keep pushing up. In which case the target is 130 to 145,000, because you'd be repeating this entire leg, and it'd be a very fast move up, and you'd be up there in no time, like 3 weeks. Yeah, my expectation currently is a reaction to come from over 100,000, 101 to 103, something like that. And I'm expecting a rejection because there's a lot of orders up there. Some people just want to fill their bag or fill their sell orders at 100K just to say I did it. It's not necessarily bearish. There's a lot of profit taking, I'm sure. But if we are matching this leg to come from up there to come down, I would not expect any daily candle closures below, say, 94,000. If you're closing below that, it would appear as though something different is coming, and we're coming after these liquidities or perhaps deeper. Let me get into the daily and show you the deeper pattern that is more of a correction that I could match with this. So on the daily chart, the repeating pattern that I'm currently watching is this leg matching this leg up, and what would come thereafter would be this sharp correction. So if we take that measurement from current areas, so a trend-based fib extension, we will measure how far down that move was from the ETF, and we'll project it from current areas to get a rough idea what it could look like. Maybe we'll measure from 101. How about that? We'll lock that in there. So I'm not saying that this leg has to repeat down here to 79,000 to maybe even as deep as 74,000. I'm not saying that it has to, but what I am saying is see that as an opportunity. Your invalidation of that leg matching is 68,000. So anything below 68,000, you're getting back into this consolidation and the rally is likely over. So if price is able to come down that far, fill your CME gaps down there, whatever, liquidate a bunch of people that are over leveraged. That may be the move before you repeat this leg, targeting 170,000. That would just be a 1-to-1 measurement of this entire leg for that entire leg up, and you'd be there by probably February. This rally took 180 days. This one, I'd expect it to take a similar amount of time. So what is that, 180 days? 5 months total. So 5 months starting here in September. It's about right. So those would match. But currently everybody appears to be trading up to 120 from here, which that does make sense. So, but if this leg matches, this brings you back down, wipes everybody out, and then goes, which that's often the way markets work. So definitely be watchful of something like that coming into the mid-cycle low in early December. If we have something much more reserved, it would just be the matching of this leg right here coming from there. Basically a nothing burger pullback before repeating that. And a little pullback there to get back in, another push before a larger drop down to back test that for the final push. And still targeting probably 150, 160 on that, maybe as high as 180. So if we do get a dip, how deep does the dip go? Well, it could be a variety of there. You could have the mild one. You could have all-out crash to scare the crap out of people. Or a grinding buy every dip in there type of scenario before continuation up. So say we get a drop from 101,000 down to, say, 80,000, 79,000. What would that look like, say, pertaining to Elliott wave? Well, what if we're thinking of this as a 1, 2, 3, there's your wave 4, and now we're pushing up for 5. Where does 5 go? We're just way up there. 480,000? Yeah. But that being 5-wave structure, this can be wave 5 completing up here, or that can be just wave 1 of an extended, say 1, this is 2 coming back down, 3, sideways 4, 4, 5. That would come in something like October. Targeting would be probably $350, something like that. You might have very quick move up, a lot of sideways, and then up. So how does Elliott wave match with the way that I look at waves? Well, let's draw it on there. The way that I would draw it, I'd be matching this leg, this leg. This would be my median. Matching the accumulation or reaccumulation with a small distribution up there for an upthrust after distribution, something similar to that. Getting a target of like 350,000 on Bitcoin by October. And this would be really, really weird, because if you're matching that over here, you'd be complete with this leg up by February. Then you're sideways for 6 months again before an October push, or it would be more like a late summer into October peak right there. Which, that works. I don't know that I can see it happening. It's just a potential wave pattern to look at to say, hey, maybe this is going up for an extended 5th wave, the way commodities generally do. That 5-wave structure from here could be totally different than I'm expecting. And it might just be a 1, 2, 3, 4, 5, and this thing's done by May. That works as well, by April, May, something like that. This would be a very fear-driven rally. It would be, making the parabola. You have a break of the parabola, and you're done. So at the end of the day, how do you invest and trade in this? Well, the only thing I can tell you is any Elliott wave count that you can pull off, it'll eventually work, probably, or it may not work. It's a hit or miss. Or any other indicator can tell you one thing, but it does another. I can tell you when Bitcoin does start going really parabolic, if it does from here, the indicators are going to be throwing you sell signals the whole way up. So the only way that I've found to stay safe in that scenario is trade the trend. I can't emphasize that enough. That is really the only thing that'll keep you going in the right direction. Something is trending up, it's trending up. There's no denying that this is making higher highs and higher lows until it's not. Especially on a weekly chart, the weekly will definitely tell you where the direction of the overall trend is going. The daily tells you how much farther the daily is going to go. It's just going to keep going until you get a daily lower low close and a lower high, then another lower low. That gives you a trend reversal. And we could look at the weekly here. This is now in an uptrend. This is this much higher. This stays in an uptrend as long as you're still above probably this swing low. The weekly close below 67, and I would say it's likely the trend is broken, and you may get a lower high and a lower low, but trade it appropriately. There is a fair value gap down here all the way to 73. So there's a fair value gap to fill right there. Another one right here to fill if it wants to. Doesn't have to. You can see the weekly chart filled this fair value gap over here. So that wick to the previous wick is a fair value gap. And it filled it in right there. And then this one pushed down and just filled this little one right there. Still have an open one here. The price is kind of running away from it. Maybe next time we'll get that one. But yeah, weekly is in an uptrend. Daily is in an uptrend. 4 hour, I do believe, is in a downtrend. Check that. Zoom into this 4 hour chart. We can see that we did close a lower low. There's your previous low. There's your lower low. Now you're in a 4 hour correction until this 4 hour closes above here. And I suspect that's how we're going to play out for the next few hours. This is going to push up here and close a 4 hour up there in the next, probably the next 3 hours. And then you'll pull back, grab this liquidity, and push up for your 100K, mimicking this pattern right here. This is just an ABC up. This was likely to repeat doing the same thing, some kind of ABC up to complete that pattern. Then the correction comes. If that correction looks just like this and gives you a big green candle that comes out of it, let's draw it out. Let's draw that out because it's important. So the anticipation is to repeat this pattern, pushing into 100, 102,000, something like that. Out of that, if you get a correction that just looks just like this, out of there, you probably close a lower low, but that's okay. If what comes out of there is this engulfing candle repeating over here, then you'll repeat this little flag, and then you're going up big time. Because then you've cleared all your orders, you came and pushed them down here, gathered more, and now you're going. So that's pretty important to look at. But you need to maintain higher highs and higher lows. So we'll try to keep an eye on the pattern. If I see that pattern happening, then I will try to make another video that says, ooh, buy setup, here it goes. Stop loss will go at the low, which might be like 94 or something like that, 93.3, somewhere in that vicinity. If the market has enough liquidity and enough short interest to continue pushing up, we will see. But yeah, maintain trend. You have to think of how much higher high, higher low. If you get a higher low here, no daily candle closures below 94, and it just wants to push up, it'll just keep grinding up while everybody's trying to short it, because for some reason people like to short an uptrend, whereas people tend to try to buy the downtrends. They're trying to buy dips that keep dipping. It's the same thing. They try to short a move that just keeps pushing up. So wait for your lower low close, then you get a lower high. So right now we have a swing low. That's a 12-hour swing low. If you do get a 12-hour lower low close, look for a lower high and another lower low, then you're starting a downtrend. Then you start the distribution. Then you're going to be moving down. So I hope that was all helpful. Getting to be a kind of a long video here. But yeah, looking for a dip. What type of dip do we get? Do we get no dip? Maybe we don't get any dip with our chips. So hope it was helpful. Keep your stops tight and have a good night.